Hi guys, welcome back to the Art of Trading.net. This is Trader Stewie with you here again. It's been a while I haven't done a video. I just want to do a quick video for you guys about two trades that we did this week at the Art of Trading.net. Uh, so let's just get to it right away. Basically, this is the first trade that we did. Its symbol was PDC, which is Pioneer Drilling. This is a trade, that I've been doing for many, many years now. It's called the Holy Grail setup. This is a setup invented by Linda Rochke. This is a trade that I do quite a lot. It's as a momentum trader. You know, you, trades like this is you'll see me take a lot of trades like this. Pullback trades to the 20-day moving average or a 20 period moving average. This kind of trade works on many time frames. I use it a lot in my day trading using 5 and 10 minute charts. I'm going to give you an example here of how it worked on a daily chart. So here we go, guys. First trade that we did, one of the trades that we did this week was PDC, a Holy Grail pattern. And here's what exactly went down with this one. As you can see, guys, the stock, just like any stock, I like to trade. I like to make sure that there's a prevailing strong trend on the daily charts, especially for these momentum trade or these dip buy trades. I want to make sure that I'm entering a stock that is in a strong trend and hopefully buying it on a dip, buying it on a pullback. So basically, here's what I saw. Over the last few months, the stock clearly loves the 20-day moving average. As you can see here, loves to rally. Look at these volume patterns too, guys. Huge volume on the up days, low volume selling on the down days. This is exactly what you want to see. When you buy a stock, you want to see big volume on the up days, and then small low volume on the pullbacks. This is exactly what you want to see. You want to see that kind of pattern because it gives you confidence in what you're buying. It just shows you that there are aggressive buyers in the stock, and you always want to be buying stocks, where the buyers, are pretty aggressive. Obviously they somebody knows something and they want to own the stock, and if somebody who is much smarter than me and they have bigger accounts than me, like mutual funds or hedge funds, and they're buying the stock hand over fist, as you can tell here by the volume patterns. Well, I want to own it too. You know what I mean? So you always want to be kind of like, buying these kind of stocks. And as you can see, this is an oil stock, and as you can see with higher oil prices lately, these kind of stocks have been very hot lately. Big momentum, and as you can see, the stock is definitely not lacking any momentum. It loves to move. It loves to move aggressively higher. It has nice and shallow pullbacks. As you can see here, the pullbacks are very shallow, and it loves also the 20-day moving average. This stock just loves it. Every time it pulls back to the 20-day moving average, it always found buyers and it reverses right back up. So as you can see here, it did it once over here in January, did it once here in February, pulled back to the 20. This is the 20-day moving average, by the way, guys. This green line here is the 20-day moving average. This blue line here is the 50-day moving average. So as you can see, the stock has been so strong, it did not even dip once to the 50-day moving average. So this is a sign of strength, guys. The stock is so strong, and there's buyers at every corner. There's buyers to take it aggressively higher. That the 50-day moving average has not even been touched once over the last 6 months. So this is a sign of a very very strong stock. This kind of stock, though, I would not be surprised to see it even go much higher in the next few weeks, if you're willing to hold it for that long. But as you can see, strong buyers on the up days, weak sellers on the down days. And you can see here, guys, the stock here loves to pull back to the 20 moving average. And look at this, it pulled back here one more time to the 20-day moving average. First of all, look at this, guys. Notice how we had here a bull flag right here, and the stock broke out. And what I've been telling people or my subscribers over the last few weeks is that be careful with breakouts in a market that's very choppy, because breakouts in a choppy market will tend to fail. So this is a perfect example of what I've been telling people. Don't chase breakouts in a choppy market, because chances are it will fail. And this is exactly what happened here. This is a beautiful bull flag where the stock moves sideways in very small consolidations, broke out beautifully here on big volume. But guess what? Look at that. The very next day, it failed. But that does not mean that the stock is busted. It just means that the stock is not ready to move higher due to market conditions. But that does not mean that we cannot buy it back, or we cannot buy it on a pullback. You know, so as you can see here, the stock, it did two. Look at these two candles. This candle right here, And this candle right here, two candles that look like little mini hammer formations. These are called mini hammer like hammer type formations. They're kind of basically reversals, and there's two of them. So one of them is good, two of them is even better, and they're both on the 20-day moving average. And look, this guys, the 20-day moving average is rising. So this is very, very bullish. So when you see this kind of reversal pattern on the 20-day moving average, this is a very, very bullish signal in my book. So this shows that this could be a good swing trade entry right here. We can enter the stock right here, around that 1380, 1390 area. Put a stop loss here underneath these lows right here around 1330, 1320, and then maybe a good target, maybe a retest of the highs here, which is 15. See that? So you buy it here on this little mini hammer, and stop loss right here underneath these lows here on these two underneath these two hammer low formations, these two hammer low candles right here, and then hope, if market conditions are good, or if the stock is really as strong as it's showing, as it has proved to be in the past, 15 would be a very, very good target. And as you can see, guys, here we go. This is the 30-minute chart of PDC. This is exactly what we saw here. And as you can see, guys, look at this. Um, the stock. Here's where the stock had this little beautiful little. This is the 30-minute chart, guys. Look at this beautiful little bull flag here on a 30-minute chart. Look at that. It gave you a breakout right here, and look at that. It failed just because the market conditions were very choppy. Breakouts fail, but that does not kill a trade. And as you can see, guys, here the stock started to move, chop here sideways. It gave you basically on the daily chart. It gave you those two candles, those two little reversals candles on the 20-day moving average. On the 30-minute chart, we entered the trade right here around that 1380, 1390 zone. This is where we entered the trade. Put a stop loss right here underneath these lows. Target was 15. Okay, and as you can see, guys, once the stock started to work, I tend to raise stop losses, and I also tell my subscribers, when you enter a trade, especially if you enter a trade with me, I would much rather raise a stop loss, when the stock becomes profitable, because you really don't want to see a stock that's profitable, turn red on you. That it's just very demoralizing, and it's not good for the confidence. So basically, what I did is we bought it at 1385, with the alert service, and then we quickly raised the stop loss. The next day, as the stock started to work here higher, it hit around 1420. So we bought it at 1385. The stock went to around 1420, 1415. I raised the stop loss to 1390. I wanted to ensure at least a tiny gain, or at least a break-even trade. Um, but as you can see here, the stock quickly it dipped, it took us out. But however, a lot of subscribers decided to hold on to the stock. They maintained the original stop. They decided to hold on to the stop. As you can see, guys, the stock hit 15, and that's when I emailed subscribers telling them, anybody who's still left in PDC, go ahead and sell the stock because it achieved the target of 15. And as you can see, guys, here, this is what it looks like on the daily chart. As you can see here, these are the two reversal candles right here. These two little hammer candles on the 20-day moving average. As you can see, guys, here, beautiful. And once again, guys, the stock proved again, as you can see, guys, look at this huge volume right here, huge volume. So the stock indeed did reverse off the 20 moving average. That was it. That was what we had hoped for. Started moving higher, and look at that, guys. The stock moved again, back to the highs of 15. That was the target, was 15. But to be honest with you, now that I'm looking at the stock again, I think that there's another setup in the stock yet again. Look at this beautiful little setup here. Huge volume here on this day. This tells me that there's still buyers even as the stock hits 15. So to me, to be honest with you, this is a setup right here that I'll be watching tomorrow again. This stock looks like it wants to break out. So today is April 17th, 2011. Let's just watch the stock over the next few days. Let's just watch it this week. Today's Sunday night. Let's watch it Monday and Tuesday and see how the stock goes. My bet is that this stock, works its way higher over the next few days, and we might be able to see maybe 16 or 17, maybe this week, maybe in the next 2 weeks. So definitely keep an eye on this stock. So anyway, guys, so this is one trade. Congratulations to those who played it all the way and sold at the target. Bought at 13.85, sold at 15. That's a pretty good trade for a 2-day hold. So congratulations to those that played it like that. And even those who played it and stopped out at break even. Guys, there's no shame in buying a stock and then following your discipline and then selling a stock at break even. I mean, this trade it worked this time. Maybe with another trade, you bought the stock at 13.80. You don't let's say you don't raise the stop loss or you don't follow your discipline, and then you maybe this time it doesn't stop out break even. Maybe you stop out for a 2 3 or 4% loss. So I wasn't trading. You always want to follow your discipline, no matter what a stock does, what it does later. I mean, hindsight's always 2020, but you always want to follow your discipline, no matter what. Discipline is number one. So definitely, nobody ever loses. When you start stopping out at break even, because that just shows that you're a disciplined trader. That first of all, you can pinpoint good entries. Second of all, you have the discipline to exit. If a stock reverses on you, to exit at break even. Remember, guys, it's capital preservation first, making money second. As long as you know how to hang on to your money, you will make money once the good setups start to come in. So there's no reason to there's no reason to keep chasing and stocks and in frustration, when a trade stops at break even, or blah blah blah, whatever it is. As long as you maintain good discipline and you have the skills to spot trades just like this. I mean, to be honest with you, this trade on a scale from 1 to 10, I would give this a 9 as far as an easy scale. This was one of the easiest trades that you will see, and you know what? There are many trades just like it every day in the market. So trades like this are very, very abundant. All you have to do is just do your homework, work hard, and make sure to spot them. And remember, guys, volume, volume, volume. Volume is key in any stock. When you see a stock, a beautiful trending stock like this that moves up on big volume, pulls back on low volume, these are the kind of stocks that you want to be buying. These are the kind of stocks that you want to own in your account. These are winners. These stocks end up going much higher than you originally thought, because first of all, the bar, look how aggressive the bar. I mean, look at this candle right here. I mean, that just tells you that there are some aggressive buyers in this name. I would not be surprised to see this name. Right now it's at 15 or 13, 14.95. I would not be surprised to see this name go up another dollar or two this week. So definitely keep an eye on the stock this week, and we'll see how it goes. All right, guys. I hope this helps, and I'm gonna do here one more video here later on tonight. All right, guys. Good luck.